What if I told you that two low profile companies are quietly riding India's next big wave? Not with noise, but with real numbers and real momentum. Today, we are diving into Aptus Value Housing Finance and Suzlon Energy, the two companies powering India's two key macro trends. One by financing homes for millions of first time owners, and other by fueling our clean energy transition. Hey there, I am Palani, a technologist turned investor and an early retiree. I share my experiences from 20 plus years of investing in US and India. Please note that I am not a financial advisor. Investing involves risks. Do your own research before investing. If you would like me to cover any other stocks in detail in the future videos, please leave a comment. Before we jump into two stocks, let us look at what these macro trends are and where the overall market is. Let's first look at the macro trends. First on housing. India's mortgage to GDP ratio is just at 11%. Compare this to more than 50% in the developed countries. This means the housing finance market is just getting started. So there is enormous room for growth. Second, on the energy transition macro trend, India is racing towards 500 gigawatt of clean energy by 2030. Compare this to currently installed capacity of 232 gigawatts. So there is a long way to go and wind is going to play a major role. Now, let us take a minute to look at market. Nifty has gone up primarily driven by large cap stocks. The market is currently consolidating in a narrow range between 24,000 and 25,000. In the next run beyond 25,000, we can see quality mid-cap and small-cap stocks gaining momentum. In today's video, we are going to cover one large-cap Suzlon Energy and one small-cap Aptus. Without further ado, let us jump right in. First stock is Aptus Value Housing Finance. Imagine you are a self-employed or a small business owner in a small town. You earn well, but banks won't give you a home loan because you don't have a formal income proof. That's where Aptus steps in. They provide housing loans, small business loans, and loans against property. Note that all their loans are secured without little risk for the loans. Aptus has built a niche in semi-urban and South India, lending responsibility to borrowers with a stable informal incomes. Now let's look at the numbers. Aptus revenue and earnings grew at a whopping 28 and 22% respectively in financial year 2025. What I like most is the very high operating profit margin of about 85%. Assets under management crossed 10,000 crores, demonstrating 28% CAGR in last 5 years. Total live customers crossed 1.6 lakhs, demonstrating 21% growth year over year. FIIs have been consistently increasing their stake from 19.5% at the beginning of 2024 to 27% currently. This story is not just growth, it is profitable growth with a rock solid asset quality and one of the leanest cost structures in the industry. Now, what are some risks to keep in mind? Slight NPA rise could be early sign of stress. 2. Digital lag. Mobile app adoption is still low, which might affect the scaling. Bottom line, if you believe in India's tier 2, tier 3 middle class rising, Aptus is a front row seat to the story. Moving to the second stock, Suzlon Energy. Wind is back, and so is Suzlon. For years, Suzlon Energy was the cautionary tale of over leverage. During 2008, the company had global ambitions, took lot of debts acquiring foreign companies. The company was hugely indebted but the story has flipped since 2014. Suzlon today is a clean energy turnaround story and it's got the tailwinds to prove it. India is adding 25 to 30 gigawatts of renewable energy every year. Wind energy, which had slowed down, is seeing second wind. Suzlon commands over 30% of India's installed wind capacity. Let's now look at the number. Suzlon revenue and earnings have grown massively at 67% and 212% in the last year. Q4 net profit was up by 365% year over year. Yes, that's not a typo. On the order book, highest order book of 5.6 gigawatts providing 2+ years of visibility. Strong pipeline provide clear revenue outlook. It has marked client base including ACC Cement, ITC, Bajaj, Reliance, Jindal, etc. Why this comeback feels real? 1. Suzlon is fully integrated business model from blade to maintenance. 2. Government support through clean energy corridors and PLI schemes. 3. Clean balance sheet, tighter execution and fresh project momentum. You are not just investing in a wind company, you are investing in the renewable backbone of India's energy future. So, what do we need to watch out for? Execution risk. Wind projects are complex with site and regulatory challenges. Heavy reliance on state auctions and policies. Any delays impact cash flow. That said, if Suzlon continues to win orders and deliver profitably, there is serious re-rating potential. In nutshell, if you are bullish on India's structural growth story, these two stocks deserve a spot in your radar. If you enjoyed this breakdown, smash that like button, subscribe for more deep dives on high conviction Indian stocks. Thanks for checking in and see you in the next video.